All right. Let's see where to begin. First, we're going to do a market recap. So, since I haven't done this in a while, let's just start from the beginning. We have this. The all-time high has gotten broken through, which was expected. And then on these dailies, we have still bullish bias. Had a down candle day. We have this huge imbalance. And we don't really have anything after that. And then we have this is honestly high confluence, I'd say. These lows getting taken out. I wouldn't say tomorrow, but I'd expect. My bias right now is most likely bearish. I'm feeling bearish. Even though we're in bullish, I'm not going to promise nothing. But usually before, well, this could be an anticipated break of structure on the 4 hour. But obviously we can't be waiting for 4 hour candles to be closed and all that, because it's just too long. But since there's like good sell side liquidity resting between here or under here, we have also unprotected lows right here. So let me make these black. So it could be, tending to go towards these interest areas of liquidity here. Today was a bearish day. I took a trade on it. It was very choppy. We opened up right, let me get the exact market open, but we opened up right over here. Yeah, right here. Let me go vertical line so you can just see it. All right, so really it was taken off because we're in bullish structure here. We had this breakish structure to the upside, this one here, and then we had this fair value gap push up, but then it kind of came into this order block. And the reason this is an order block is because it's the last up candle before the down move. So it came into this order block, but it did disrespect this fair value gap. So it was an indecisive kind of move. That's why we have these choppy candles. So we could get rid of this. I took a trade because of this 1 hour bias I've had. And you see we broke structure to the upside, but I wasn't really too concerned about that because we had this 1 hour fair value gap. And this is pre-market news and all that stuff, so I knew it would have to be mitigated at least. And what I mean by mitigate is that when a price moves like this so fast up, there's going to be an imbalance created like this one right here. This is called the fair value gap. And so the way you spot these things is you look at a candle and you look if it has any wicks or candles next to it. And I'm not saying outside far next to it, I'm saying right next to it. The next candle and the before candle. So looking at it here, this wouldn't be a fair value gap because there's a candle here and a candle here. But here we have a fair value gap because there's candles. So we had this marked out, and the way you determine whether a fair value gap is respected is if it wicks into it and moves away from it. So seen here, it wicked all the way through it, and during the price action you just see it, bullish candle. But you later wait, okay, so it wicked through this one, it wicked through this one, it wicked through this, so you're anticipating. So you go down to the 15-minute, and I believe on SPX, because this is just the index, it's not as reliable, but usually on a higher time frame you have more time to go up and move down. So like here, it could have went all the way up to here and still had time to come back down if come down fast. So on SPX, if you go to the actual stock, you had this. It pushed into this 15-minute. There was no hourly because it doesn't record extended. But if you go on SPY, I could show you. On SPY, it had this extended. So it respected it early into the day until the afternoon. This is usually where it runs for just, honestly, it either is going to run high or it's going to run low by the end of the day. So right there, it came up into this 15-minute fair value gap. And so it respected this 15-minute and respected this 1 hour. And then, let me remove this. And then it broke structure here. So this is very high confluence because it came in higher time frame entry, or higher time frame PDE array. So right here, this was a break of structure because it was low formed and then the close underneath. And a fair value gap. So that was high confluence. And then we came up, respected that fair value gap. So you could have even taken an entry. This is my entry right here. Since I saw the break of structure, I just went boom. This fair value gap entry. Let's change this color to purple for 5 minutes. So this fair value gap entry right here. And I targeted this. And it looks weird why I targeted this, but if you go to regular trading hours, this is called a new week opening gap, or a new day opening gap actually, because this wasn't a weekly thing. And so the new day opening gap, like this for example, this whole thing, there's no price action. There's no price action here. It's completely, when it opens, this is all not happened yet. It just opens up here. And so I anticipated it getting filled like it did today. Well, it did yesterday. And then it also opened up with this gap here. And it came and it filled this. So I did it at the top of that candle. So right there I shorted. Obviously I would enter on the 1 minute. I'd mark out that. So I saw it come up in. And then I just went, okay, let me go short. Because I saw it completely respect it. Completely. And if you want to wait it for the down move and then catch it here, because it pushed into this order block, pushed back into it. And I took that trade like this. Let me see. Got an entry right there, targeted this. And then stops right above there, 1 to 2.6. Hit take profit, and then it ran back up. And why did it run back up? Because it hit what it needed to hit. And I'll talk about this, because this was just, I'll explain it after. So it took out this, and so this could practically be seen as, on the 15 minute, as like filling what it needs to fill here, right? So it filled it, and then it went back up, and then it still had an imbalance to mitigate right here. This 15-minute imbalance we had marked out. And that was my initial thought of process to entry off of. But I saw that 5-minute and I didn't want it to run without me. I knew it was going lower. And then I took a correct exit point. But then this 15-minute got retraced into and respected. So that would have been the initial entry. That would have been the highly, let's say, highly profitable entry. And, you know, if you didn't catch this whole move because it doesn't really give an entry, I guess you could have waited for equilibrium. Let's see where it was. Let's see if it went into it. Let me turn this shit off. Alright. So, yeah, it went into that. You could have marked out like maybe a 5-minute fair value gap. Okay, so it had this whole fair value gap. It went into it, into equilibrium, right here. It's like ICT market maker, sell model and buy model. You could have gotten on both sides. It's just a matter of where the market's targeting. And so in the 15-minute, you could see this new day opening gap kind of finish off here. But if you go lower, because the market is very fractal, you could even see down to the 1 minute that it has, this is the last minute of trading of that day. And I'm sure if you draw it out in time, if we do like a horizontal line, exactly. See, I didn't even look back at this. I just knew. It exactly came down to it. And then after that, it went into a buy phase. Because it targeted the liquidity it needed to target, and it mitigated the imbalance it needed to mitigate. So after this, you could have just seen this as not a liquidity sweep, but as the imbalance being filled. So the imbalance was officially filled here right after it wicked through it. Then you see instantly the market rally on up. You got to break a structure to the upside, and you could even call it on the upside at 2 o'clock. Could have caught this break a structure to the upside. This 1 minute fair value gap. Respection, huge respection, comes all the way up. And the reason you're not worried about all these SIBIs, even though you'd probably be like, oh, it came up, respected this one, fell back down. The reason why you're really not worried about these SIBIs is because you would trust your strategy of, okay, well, I understand what I'm talking about, that this imbalance gotten filled, and that's what we wanted to target was a new day opening gap. Now, sometimes it could just fill this and then continue falling. It's all in a matter of what the market is seeking. And so recently, it's been extremely bullish. So this I saw as a kind of just a mitigation of an imbalance. So that's why you're not really trying to look for respection of these fair value gaps. You understand? Like, when you're on the market's going to target two sides. And when you're on the correct side of where the market's targeting, you're not looking for the other left side of the market. You're not looking at the left side of, oh, what if it respects this? Or what if it respects this? See, when it's coming down, and this is a perfect example, you don't see any of this yet. Let's just say we're looking from here to here, right? From this whole downtrend. When it's coming down like this, you got to look at what the market's been doing. After it's swept all-time highs, it's consolidating like this. So it gaps up, fills this gap. Gaps up, fills this gap. So then I was looking, my initial bias was short-term bearish. The market can move up, just how it closed bullish today. But today was a whole down move. For the last hour or 45 minutes of trading, it was bullish. But I'm not going to sit there till 3 o'clock and continue trading. So I mark it out. I see, okay, so I see this SIBI. It respects it and then starts moving down. So then I see it respect it and I see it moving down. I'm like, okay, the market wants to target lower liquidity. And then I mark out the points of liquidity I think it wants to target within the day, which was that new day opening gap. Not this low. The new day opening gap was the best part of the liquidity it could have targeted. And then if you go into extended trading hours, you probably could have seen some. You can't even really, like, that's the thing with extended trading hours, is that it's reliable, but not as much as regular trading hours, as New York session. Because that's what the actual S&P SPX is. It's all New York session if you look at it. Not extended, none of that shit. So it's pretty much what I'm trying to say. You see this fair value gap here? This one is pre-market. You should respect this one more because it's within New York session more than you should respect this one. This one gets closed under. These get respected because they're within the time frame, kind of. So you would respect these more. See, this whole down move, it could come up and just continue wherever it wants to go. That's why you kind of have to, if your bias is bullish, you wanna understand regular trading hours as well. So you could see this whole thing. You could be seen as, this order block here. This is a huge order block here because it rallies up all the way up, and this is an accumulation phase. So you could have seen that as another form of like liquidity, but the way I saw it, it gives you two perspectives. This is accumulation and order block, so it still shows you like bullish bias. Even though you didn't get a sweep of liquidity, that's kind of what you want to see, these sweeps. But then you have to look at the regular trading hours to really understand it. See, when you go to the regular trading hours, it's clear as day, even down to the 1 minute. It's clear. Boom. Right there, from here to here. I mean, come on, that's an algorithm. And then it instantly switched into a buy model. Distribution, reaccumulation, distribution, reaccumulation. You understand? Instantly. This was what it was targeting for the day. And so the hardest part is figuring out the bias of what you want to do. That's why it's so important to know how to read the price action. So as of now, I mean, we're playing within these consolidations, kind of. These are kind of consolidations throughout the days. We're kind of playing in a range. And so you want to see which range. And I like to do my overall, because I do this at night. I like to see where the market's also going at night. We're playing within this range. Now that we went through the market bias, if you guys have any questions, comment. I'll talk about it in the next video 100%. So even in the pre-market, you see it's still respecting this and going down. But I don't know. Usually when it goes down in the pre-market, it's going to open up higher. But, you know, you never know. If you wake up and it's still fucking around down here, you kind of want to watch out for these points of liquidity. Higher time frame holds higher power, so these are unprotected lows. You know, this low hasn't gotten swept, this low, this low, this low. So, you know, and the market's been such a buy program that it's hard to go long on it, because once you go long and the all-time highs are already taken, it's like you got nothing else to target over here. There's nothing else. You're going to target the all-time highs every time. I think it could be switching right now, at least lower, to fill in this imbalance. And we can remove this now. To fill in this imbalance, sweep some of these lows. I think that's what we're going to be seeing. But until we get a break of structure, and I think we got that on the 1 hour maybe. I mean, right here we have a pre-market break of structure, but can't really trust that too much. We have this break of structure here. What I want to see, honestly, is lows. So my prediction for tomorrow morning is, since we're already down here, I would say this gets swept. Depending how low we go, this could get swept, and then we could return into one of these imbalances and then find a short off of that and go lower. I'm not really bullish. You know, I think the market's in a weird spot, but I'm not really bullish. Like, long term, we could be bullish, but right now, since I'm doing intraday trades, I want to find shorts off of them. So we could kind of just look for all of these liquidities. This is a liquidity void right here. This was a complete choppy day. This whole day was chopped up. I mean, this was 2 days of straight up chop. And now we're kind of chopping around too. We haven't really gotten much of anything on the higher time frames, really. And on SPY, let me see, yeah, that got mitigated there. Is this new week or new day? New day. This one I'm kind of looking for, because it never really fully got closed under, even though they tried, never really went. I also have these all day highs marked out, because if you zoom out, you kind of see this is the accumulation phase and this is the extension phase. So you want to watch. This is a huge accumulation. You know, this is all free running. This is going to get rebalanced. What I think this 100% getting rebalanced. Right now we're at all the way up here though. But honestly, we did close bullish on the day. If we look at the bias, we closed bullish. Did we break structure? No. Not really. We broke structure. It really depends what you consider a break structure. Let me remove all these. Let me go into a better chart. Oh yeah, so we actually closed bullish, but we didn't fully maintain bullish structure. So as of now, pre-market bias, bearish. Closing this fair value gap. It's looking bearish. I'm honestly bearish. I want to see these get taken out. These get taken out. I want to see this be a. I think over here it can be sent up a little bit, because this is a whole accumulation phase, and that's what the market has it down as. But overall, I think this will be swept out eventually. So yeah, I mean, it's a matter of time. Tomorrow I'm going to see how the market plays out. We're going to have all these, gaps and fair value gaps to play within. And first thing in the morning, if you guys are trading, I'd say because things could change. Still got, 9 hours till market opens when I'm recording this. It's 12:05 in the morning. First thing I'd say is find equilibrium. If this continues down, and then in the morning it has a little blue candle, by then find equilibrium on that, and target the nearest fair value gap or liquidity sweep or PD array from there, and then go about it and trade safe. Have a good night.